Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Leo Hefner. Thanks for being on the show, Leo.
Hey, glad to be here. Thank you very much for having me.
Leo is a manager of South Bend 7, a debt-free private equity real estate investment fund that buys and holds cash-flowing residential real estate in the Midwest. His experienced professional with a demonstrated history of working in the investment banking industry, skilled in negotiation, sales, forward and reverse mortgages, private lending, and business development. He's co-founder of the Mastermind Association with Dr. Greg Reed. As a co-founder of the Mastermind Association and a certified mastermind leader of BrainQuest Mastermind, Leo has had amazing opportunities to interface with some of today's largest business and thought leaders. So, Leo, thank you again. I'm looking forward to getting to know you a little bit. And but you got to give us a little more about your background or real estate, how you got into this business and operating a fund. And I'm just looking forward to this a lot. So, give us a little more background. Let's jump into what you do exactly.
All right. Well, as far as how I got into real estate, I got very humble beginnings. I grew up on the North Shore of Kauai, over in Hawaii. My dad started out in property management, got my mom into it. He went off into sales. So, I was raised on an island in the jungle with parents doing real estate. And all of the biggest clients that were coming over and my dad's clients anyway, all had something to do with real estate. So, I had a couple of careers before I got into where I'm at now, but real estate was something I was always in and around.
Wow. So raised in the jungle and your parents were in property management. So you're at least you were involved a little bit. You saw how real estate worked a little bit, or rental real estate.
I did.
Yeah. So what about, when you got into, and I maybe you could just explain this to the listeners a little bit and myself, you're operating a fund that buys and holds cash flowing residential real estate. Explain that a little bit, what that looks like, what your all's function is.
So kind of where this started for me is actually in the last crash. 2006, 2007, I was wrapping up a computer training center in Vegas. There was tons of opportunity, but I didn't know the right people in order to take advantage of it then. And I watched a lot of people lose a lot of wealth. And as I started getting into private lending, and I was seeing where a lot of these people, where their wealth shifted. And it came from being over leveraged at the wrong time, where they got into the buying, just the flurry of, just buy everything, just leverage it to the hill. And in fact, I met a dude who lost 997 houses in Vegas over the course of 2 years.
I can't even fathom that.
No, that's multiple foreclosures a day. What is it? 992 2 years. That's over 2 foreclosures a day, every single day for 2 years. And when I was talking to him, I'm like, how did that even happen? And it was odd because he wasn't really sure. He's like, the bottom just fell out, and I couldn't pay these bills and this and that, and people started leaving, and then I didn't have staff, and then just everything just kind of crumbled. And he was leveraged to about 80%. And it was through our conversation where he kind of went, oh, I had too much debt. That's what it looks like to me. But he wasn't alone. Just over the next couple of years while I was doing private lending, I was seeing how the banks really were in the best place in a lot of in all of us, in every loan they're in the best spot unless they're in second position. So that's what brought me back towards, well, how do I buy rental real estate? How do I buy real estate and create a safe place for people to be able to park their money for the next crash? Well, and that was how we came up with South Bend 7. It's debt free. We have zero debt. We own right now about 35 doors. They're all cash flowing. They're all lower income. So, it's that Section 8 where a lot of people shy away from, but we've had very little dip in our rental income during this whole COVID-19 issue. This is exactly where we wanted to be. I'm not losing sleep. I don't have banks calling me. I don't have investors calling me. we're good. This is what we designed this for.
Nice. Well, it's interesting. It's just interesting mindset to have zero debt. Like, I mean, you hear everybody preaching in real estate, right? You know, got to have as much debt as possible using other people's money, right? Quote, you know, and so, you know, I guess, yeah, you probably hear it a lot. You know, people probably say, well, Leo, you know, what if you just took 40% debt or 50%, you know, and you know, what's your thought about that?
So, you know, it's all about timing. And honestly, I don't have a problem going to 40, 50, or even 60% debt once we hit the bottom. I'm not going to leverage up right now once we're in the middle of a free fall and people think that we're coming back out of this. We're not. You know, I mean, we're coming out of 3 months of lockdown, but the financial ramifications of what we're just going through are going to be felt for years. There's no way it can't be. At least that's how I see it. There may be people that argue with me, but that's okay. So right now is not the time to be leveraged up. Right now is the time to get good sleep, not get gray hair, and go out and find those investors that, you know, see the value in this and want to protect their money from, you know, the wealth transfer of Wall Street, and just take it out of a riskier position. So, you know, it's a good time for us right now. And then once we hit the bottom, we'll leverage up, we'll buy a lot more, and then we'll spend, you know, the next 5 years paying that off down to a manageable point. So when the next cycle comes through, we're good.
Tell us a little bit about your deal finding process, and, you know, and how that works a little bit. I mean, I would imagine, since you're, you know, you have cash, you know, to buy properties with, you can probably be pretty creative. What are some ways that you're maybe being creative or finding deals?
So, you know, being creative in real estate it's an art, and there's a lot of people who, like all the real estate agents, they don't get it. You know, it's very cut and dry. But you get into, there's real estate investors out there that know that you have to be creative and you have to solve problems for these people that are selling their houses or losing their houses. And so how you come in, there's two ways you can come in and solve somebody's problems and get a house for a significant deal. One, you can just charge in and take it and don't worry about the people who's losing their house because they had it coming anyway. That's why it got there. Or you go in and solve the problem. For instance, you know, I found 2 houses that was for sale from a realtor, and it turns out that I had bought a house from these people about 6 months prior. And so now they're selling the rest of what they had. And I'm like, well, I don't know why they're selling. So I'm like, I told the real estate agent, call them. Let's just call the buyer. Except I was dealing with the buyer's wife before. So he gets on the phone. Turns out the wife just died of pancreatic cancer. She handled all of the books, all of the houses. He had no idea what to do with them. Didn't even know, had nothing, didn't know. So might as well just sell them. So instead, I gave him 3 options. This is what I'm willing to pay for them. Flat out cash, here you go. If you want to carry some paper, here's another option. If you're willing to carry more paper, here's another option. Or if you still want to get the cash flow, here's the third option. How much money do you need right now to handle bills, bury Joni, and just be okay? And it was like $5,000. I'm like, okay, so what if I give you $5,000? I'll give you, I don't know, 50 grand, I think the number was, for these other 2 houses in the fund. And now every month you will get no less than about $200, $250 a month. Well, now you solved your cash flow problem. You got groceries, you can pay bills. What do you want to do? So he disappeared for a couple of days, came back and went, you know what, that cash flow thing works really well. So I bought $100,000 worth of houses for $5,000 in cash. Solved his problem.
Oh my goodness. Wow. But ultimately, I mean, you gave him some options. I like that, you know, and I love, you know, instead of just saying, well, here's what I'll give you, and then it's kind of a yes or no, or maybe they come back, but you gave them some options. You know, have you seen that work often, you know, where, I mean, do you try to give options like that often when you're negotiating?
I do all the time, you know, and I do work with realtors, and there's a few that I work with that they know I will go around them. I will go talk to the buyers, but I will never cut them out of the deal. And so now they're trained to the point where they're like, hey, here's a house. I think it fits for you. Here's the guy's phone number. Let me know what you need me to do. I cut them right out because
right?
It is, because they can't understand what I'm doing, because it's outside of their box. And then they don't want to, because I'm the 1% of their clients that are solving problems, not just going out and buying a house. So I like to think of it that I'm helping. I'm helping our investors. I'm helping the sellers. I'm helping the community, because a lot of the houses we buy, I mean, they're lower income houses, and there's a lot of people that, because they're lower income houses, they don't have much money to put into them to even make them a decent house to live in.
Yeah.
So I buy a lot from slumlords who who just got into the business, didn't want to be a slumlord. It just happened because they didn't own enough houses. They didn't have enough cash flow. They didn't have enough money to make these places good. And then they get sick and tired of people always beating their houses up. So, we go in and we buy a lot of these places. We fix them up. We fix them up to an FHA Section 8 standard and let people raise their kids there. And, we push for a lot of them to have Section 8, because depending on what state you're in, there's different guidelines. I mean, Section 8 has the authority to remove somebody's benefits. And once you figure out how to do that, you can let your renters know, hey, you're Section 8, you're staying in this house, please stay as long as you want. Don't trash my house. If you need something fixed, let us know. And if you do trash it on the way out, we can penalize you for that. So if you want to leave, it's like, well, what's that Motley Crue song? Don't go away mad, just go away.
Awesome. No, I love that. And you're solving some problems for numerous people in that transaction, right? Including the renters, or the Section 8, they have a good place to live. But tell us a little bit about the fund side and operating a fund, maybe some pros and cons and the benefits of that your investors have even in investing in this type of fund.
Well, it's interesting because we're an open-ended fund, which means that we have a pool of houses that we've acquired. So when an investor comes in, they're buying into that pool, and they're buying into all future houses that we buy, because it's open-ended. So what that does is every time we buy a house, we increase cash flow and we decrease volatility, because that's just.
So every time you buy a house, you decrease or you increase the cash flow and you decrease the volatility. And what else?
Correct. So by increasing the amount of doors, we decrease the volatility, because if 1, 3, 5 houses are vacated that month, we've got more cash flow so it's not as big of a percentage hit. So those peaks and valleys, because how we pay is we pay out percentages of the cash flow received. So it's not a debt, it's an equity fund. So as cash flow comes in, we pay that cash flow out minus, what we charge in order to do this for our investors, as well as to keep an auxiliary account there. So if there's any big expenditures, that we've got money just sitting there ready to handle it.
Nice. So can you, it's interesting. I don't know that we've had anybody really talk about operating a fund like that. That's just open-ended and kind of, over a long period of time. So, how does that work for, say, investors investing, say the first investor versus somebody that's investing, after you've got 20 homes or I don't know, however much under management, 3 years into it or whatever it may be.
So that was interesting, and that was a bit of a learning curve, because we started this as a Reg D 504, which essentially means that we can take anybody, the dude working at 7-Eleven, the valet at the hotel, doctors, attorneys, didn't matter, anybody could get in. So
at any amount, no,
any amount. Yeah, if we wanted to make that exception, we could make that exception. We had a bottom of $5,000, but we could only raise $1 million. For when we started the 504, they hadn't upped it to a $5 million cap yet. So we started out in the 504, which was great. I mean, everybody was an investor. Everybody was a potential investor. And then once we fulfilled that, it's our SEC attorney. She's fantastic, but on the other side too, she's a little aggravating, because if you don't ask the right question, you won't get the right answer. And she definitely won't volunteer information. So, it's an attorney, right? They don't want to be held liable for your bad mistakes. So when we got to that point, it was, well, what do we do now? Well, you start another fund. So then the thought of me having, I had a flashback vision of some friends of mine that they flip houses out here in San Diego, and every house flip is an LLC. And you walk into his office, and there's a law library behind him full of LLC books. That's not an 800-pound gorilla. That's a 4,000-pound gorilla. In California, you breathe the air. That's an $800 tax. So I was looking at that, and it just had that flash. I'm like, I don't want to have 14 corporations. I don't want to have this ever-growing corporation issue, because then what happens in a year, I've got this 504. I can now go out and buy houses for this one again. But now I've got this 504 open, and I got this 504 open. Well, now I'm traveling to go buy houses, but who am I buying that house for? How do I figure out I'm going to buy this house and I'm going to choose to put it in what fund based on what? Who do I like better in it? I don't know. So I'm like, if I keep this simple and I have one pot and I put all of the houses into this one pot with the fund, then nobody can accuse me of paying favoritism with this awesome house that's doing really good, and this fund's not doing good because I keep putting crap houses in it.
Right.
I didn't want the brain damage. So I had them rewrite. We did a Reg D 506C, and we overlaid it on top of the first round of funding so that I could eliminate all of that. And then there was some interesting variations there of how I was guided to set stock prices, and those were all just mistakes that I figured out later on. And now all those, just over time, they're coming out, because the first round investors, they've been in for 4 or 5 years. They're looking to exit and leave, which is great for the second round, because the first round was at such a stock price that they were getting, 8 to 12%, but my second rounds were getting 4 to 6%. But as the first rounds leave, my second rounds are coming up to that 6 to 7 to 8%. So the dilution is going the other way, which is fantastic. And it's something that, you live and you learn. You move through and it's move through business, and you figure out things and how to make things better. And
yeah, I wanted to ask a little bit about how that's structured, or, if it never ends, how do investors get out? Or, is there, some type of exit or way for them to get their funds if they need them?
So there are, but because we're not sitting on a pile of money we need to deploy,
right.
We do have some exit strategies. Once we're either going to grow the fund up to a portfolio size that a much bigger fund is going to come and swallow it up. That is one exit. And we continue to buy things at a 40 to 60% of retail discount. There's money there on the exit. That buys the whole fund out. Everybody gets to go away. We start up another fund, and if those people want to come and play, they can come play again. The second option is when we get big enough, if we don't get swallowed up first, then we can look at the possibility of going public. If we go public, it opens up institutional money. I got people at CalPERS that say, you know what, once you get onto a market, we'll put money with you. But you got to be able to swallow $250 million at a time. We're not that big. So that's not a thing yet. Then the other way, per the PPM, you can't get out until the exit. Per the operating agreement, there's 4 or 5 different ways you can actually get your money back out if you need it back out. So we are set up and designed for a long-term investment.
Sure.
But there are ways that if you're having malfunctions, you're having problems, or if just it's time, you can go.
Now, are there tax benefits by investing in a deal like this, or do those pass through to investors in a fund like this?
Actually, all of our depreciation of the assets pass through. All of the costs of doing business are all passed through on the K1s. So absolutely. So where we see the cash on cash ROI is at 6 to 8% after taxes, and after all the pass through, you're sitting at 10 to 12. So okay. Yeah, all of that passes through.
So, are you mentioned a little bit about what's happening in the market right now, and are you still buying houses right now, buying real estate right now? Are you waiting? What's your philosophy on some of that?
So the way I've been buying, even at the height of the market, I buy like we're at the bottom. I mean, a year ago, I bought a house for $2,000 I solved somebody's problem, literally $2,000. I walked out of this guy's house, told him he was going to have to pay me $1,000 just take it off his hands because there was a hoarder living there, and it was probably the most disgusting house I've ever walked through. I mean, the walls crawled with how many cockroaches were in it. It was horrible. In fact, I ended up having to buy I had to buy an exterminator for all the houses within 2 houses of this house after we bombed it because all the bugs fled. Horrible. But I buy houses like that all the time. I bought a duplex a quarter mile away from Notre Dame at an auction for $28,000. I haven't paid over $30,000 for a house yet, and our average rents are almost $800 a month.
Wow.
I look at a lot of houses though.
Yeah, I was going to say, give us a couple of tips on finding deals like that.
First of all, it's a numbers game. When I'm out there on a buying spree, I'll go out, I'm up at 6 a.m. and I'm looking at houses till 10 o'clock at night, and I might stop to eat somewhere along the way. And I have people that are showing me houses that come in shifts because they just can't roll with me. And I'll do that for days. And I have them on total overload. But I take a picture of the address, the date, the time. I take a picture of that. Then I take a picture of the front of the house. And then I go through my series of pictures, and I do it the same way every single time. So that once I get back to the office, I can pull that up and I can look through the information. I can pull up the proper listing, if it was a realtor or not, or the notes that I've made, and be able to go through and then analyze each house based on what I've taken. So you look at a lot of houses, and then you try and talk to the sellers if you can and solve the problems. The other way is talk to property managers. Property managers who deal with investors always have investors that are looking to get out, but they don't want to get rid of their properties because it hurts their cash flow. So work with them to see if you can buy the investors' properties, and then just leave them with the property manager. Develop those relationships.
What's your plan moving forward? Continue operating this fund, then you'll be bought out, and then you'll start another one like you mentioned, or just continue to grow?
Yeah, that's the plan. So the plan is to keep buying houses, keep growing. We've already entertained a couple of offers, but they haven't been big enough yet. And, they've all come back, well, you double your size and, we'll have a different number for you. So the bigger we are, the more beneficial it is for the investors. And, as soon as we exit on this, then, we'll fire up another one.
What's the hardest part about managing a fund?
Not having a lot to do between, when you're out looking for money because you don't have enough money to go buy houses, that's the hardest part. Buying houses is fun. Raising money, for me personally, that's not as fun. I like going out and finding the deal. So, right now I'm in one of those spots where I can't go buy. I need to raise money. I've got tons of deal flow, but I can't quite go anywhere because I'm in California and they got us locked down. So it's an interesting place to be right now.
That is. What's a tip that helped you to get past that? I know you said raising money is the hardest part for you personally. What's something that helped you to get past that to get where you're at now?
Realizing that when you're raising money, it's not about me, it's about the investor. And again, it's problem solving. What does the investor need? What does the investor want? And do I even fit that bill? Or what can I offer that would actually be beneficial to them? That was the biggest hurdle, is getting out of my own way. Because I have something great, let me ram it down your throat and tell you all about it. And then forget to ask what they need. So as soon as I flipped that script, it became a different conversation, a more pleasurable conversation for both parties, and it's been very good.
Great advice right there, no doubt about it. Especially when you're learning to talk to investors, it's hard not to just, like you said, ram it down their throat, right? Push them completely away.
Right.
So, tell me though, any other ways that say you're prepared for in this type of business that you have, operating a fund, buying deals like you are. I know with no leverage, I mean, it's just incredible. But any other ways that you're, say, prepared for a bigger downturn than what we're seeing right now?
Well, if all of the properties, if everybody moved out or stopped paying rent in all of our properties across the board, property taxes and homeowners insurance, those are really my only bills. So what is that? High side, $200 a month? It's nothing. Well, we have enough reserves. We can pay that for 2 or 3 years. So, it gets worse than it is, and no investors come in because everyone's scared. We're okay.
Yeah. No, that's awesome. That's an awesome answer. And to be in those shoes where it's like, okay, if it gets really bad, I mean, you got plenty of reserves to come out on the other side laughing. And so
yeah.
What's a way that you've recently improved your business, Leo, that we could apply to ours?
That's a great question. I utilize managers in the areas where I invest. I live in San Diego. I invest in Indiana. So I'm not there dealing with tenants and toilets. I manage the managers. So, I have a weekly call with my property managers, just checking in. Sometimes it's like, hey, what's going on this week? Nothing. Great. How's the kid? How's the dog? How you doing? How you feeling? What's going on? What do you need? And other times there's like, well, we got this, we have things to deal with. And we've been doing it long enough with them that by the time I get to that phone call, most of the stuff's already been handled. So having a fantastic team on the ground where you're going to be doing business is key. And, we opened up Memphis at one point. I could not find a good property manager to save my life. I could not. I spent weeks on the ground interviewing and talking to people, and I could get it to work out. I wasn't meeting the right people. And, we bought houses before we moved there, which was one very important lesson I learned is if you're going to invest someplace that's not close to home, show up there and develop the relationships before you buy houses.
Great advice. And that's why you're looking at houses as hard as you're going those few days, like you were talking about, you're traveling safari. You want to maximize that time while you're there.
Correct.
So what's your best source for meeting new investors right now?
I'm part of Secret Knock, which is, it's a thing from Greg Reed. I go to there. I do his thing all the time. I'm friends with it's just a great group of people. Scott Duffy, the former Ryan Long of City Summit, City Gala. Those are all places I would go and I would meet investors. Scott Duffy's mastermind. I haven't been there yet, but a lot of the people that are there, I know. The BrainQuest mastermind, we put that together just to be able to help people in the mastermind association. I mean, all of that has been just very key, so how do I find new investors? I try to give back, be free with my knowledge and help, because there's people out there that need what I have or what the person next to you has, but you don't know that people need it unless they ask. You don't know what you got locked up in your head that's valuable to other people until you're in a scenario where people can be vulnerable and just talk about their business without ego.
What's the number one thing that's contributed to your success?
I want to say that giving back, serving, solving other people's problems and not letting my ego get in the way.
Well, and I always ask at the very end how you like to give back. Is anything you'd like to elaborate on that or something else?
Well, there's a couple of ways. I mean, somebody pointed this out. I was on another podcast and they went digging through my Facebook and they're like, look, what's this picture? It's me and my daughter. We're unloading a truck full of toys to give to foster kids in San Diego. So, I mean, that wasn't even one of the things that was on my radar. But, we do things like that. I mean, once a week or so, we go out and give food to homeless people around our areas. When I'm off in Indiana, one of the first places I'll stop is at Starbucks and I'll get a couple $100 worth of $5 Starbucks gift cards. And as people are just doing nice things or just being cool people, I see something see somebody do something cool, I give them a Starbucks card. Dude, that was really cool. Here you go. Thanks. And in some of these areas where, they're poor, there isn't a Starbucks in those neighborhoods. They've never been to Starbucks. I'm like, well, give it a try. And then I've started recently getting into the habit of going to one of the grocery stores that are in those neighborhoods and getting a bunch of little gift cards. So I'm like, Starbucks or, the grocery store down the street. Most of the time they're like, dude, I'll take the grocery store.
Yeah.
I'm like, all right.
Wow. No, that's awesome. It's awesome being proactive in that, like going and getting those cards. And if you're thinking that way, you're going to be ready to give them away, right?
Absolutely. I'm looking for that. I'm looking for those random acts of kindness from other people in the world and then be able to just be like, dude, that was awesome. Here you go.
Wow. Leo, thank you so much for your time today and giving back and just sharing how you operate a fund and what you all are purchasing and how your investors work in the deal. I'm grateful for your time and getting to know you. Tell the listeners how they can get in touch with you and learn more about you.
You can find me on Twitter, LinkedIn, Facebook at just Leo Hefner, Hefner, or you can email me at info7, the number 7, at southbend7.com. Both of those 7s are the number 7s. I'm easy to find. You Google me, Leo Hefner. I think I'm the first 3 pages.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.